G'day, it's Stefan Angelini here from Angel Advisor. Just giving you a quick market update, wrapping up last week. It's Monday, the 6th of Feb. Hopefully we can get through this nice and quickly. So the Australian Stock Exchange was up last week for the fifth consecutive week after 4 negative weeks in December. So some good news, mostly posted by tech stocks. So you see the likes of Seek and Xero rising by about 7% last week. Let's head over to the US. The US was up mostly last week. We saw the S&P up 5 up. And the NASDAQ up. NASDAQ is mostly made up of tech stocks, and that was up a lot more. As again, we're seeing the tech stocks have a real resurgence after a very, very tough 2022. As we look around the world even further, where there are a lot of issues in Europe, and it is quite a scary economy at the moment, but most of the economies were up last week. Importantly, some key economic data that we're seeing come out of there is that the industrial production indexes rose, manufacturing output is increased, and price inflation has dropped off, even though there's still issues around energy. Just coming back to the US quickly, last week there was a jobs report, and it's actually the best jobs report they've seen in a long time, so a massive blowout. And what they've said is the unemployment rate is the lowest since 1969. So a lot of people employed, unemployment rate very low, and particularly Apple was the strongest of all the tech stocks last week. As we come back to Australia and we start talking about the big news of this week, will the Reserve Bank increase rates? Most likely it is a yes. And most of the market is saying that they will increase by 0.25%. But Citibank have come out and said on the market index that they think it may increase by 0.5%. And if it does, be prepared that the market will start to turn down a little bit, just because the market is overall expecting a 0.25 raise. If it goes 0.5, markets may get hurt a little bit, but don't stress too much. Now, if we go just a bit broader, there are going to be more rate increases around the world as reserve banks try to take a hold of inflation. A lot of economists are predicting that inflation will fall fast. And what that means is that hopefully interest rates will soon follow after that. But what we're seeing at the moment is that there's a really high resurgence of basically private credit, short-term government bonds, high-grade credit, mortgage-backed securities. These things are normally income-producing products with lower risk that are normally pegged to the Reserve Bank currency. So as rates increase, the return of these investments increase. So there's been a huge resurgence in these kinds of things. And this is one of the most, most of the in-demand asset classes that we're seeing. Let's turn to the banks. Everyone loves but hates the banks. What's expected from the Age post on Friday is that the reserve banks are most likely going to keep increasing rates, but banks aren't passing on rate increases, which means banks' profits may increase. Now, what you're seeing is that over the last little while, the RBA cash rate has increased by 3%, but the Reserve Bank, banks have only really passed on savings of an increase of 1.82% to people with savings accounts. So the banks are pocketing that little bit of increases. So an extra 1.2% that they're making is going to have a large increase on their balance sheets and their profits. Now, the ACCC is looking into this to see if there is anything they can do to make sure that rates do get passed on to savers, because we all know that the banks are passing on rate increases to borrowers. There's a really good article on theconversation.com which indicated that most likely, and most economists are predicting, that there will not be a recession in Australia. Basically, 27 out of 29 said there won't be a recession. Some of their key predictions are that the rate rises in Australia will go from 3.1 to 3.6%. Now, if we're at 3.1% now, that's another 2.25% raises. So maybe February, maybe March. But they are tipping that in 2024, rates are going to start to come down again. So that's a good sign for the future. And that's a lot of the economists predicting this, not just one or two, most of them saying this. So in Australia, we are very fortunate in the economy that we're in. And hopefully this means that our economy will stay strong throughout 2023. Now, for those of you who have insurances, car insurance, home insurance, things of that nature, call it under the general insurance banner. Insurance giant IAG is saying that they are expecting some pretty big premium rises, mainly due to the likes of natural disasters and increasing claims. So be prepared that you may be forking out more for these premiums. And a lot of people actually start to think, do they actually need these insurances? So if you're one of those people, just be expected for a premium increases. I mean, we deal a lot in the life insurance space, so life insurance, income protection, TPD, trauma cover. There's been big changes to the wording of these policies, which means prices have come down. So it might be a good time if you have those life insurances just to reassess as well, because we're seeing a lot of rate increases in that space as well. Now, what are some key economic indicators or data that's going to make markets move this week? Number one, Powell's speech after the strong US jobs report. Powell's speech that he does, I think on Tuesday, is going to be a big determinant on what happens around markets, just to see how bullish he is and how much that will impact on his expected rate increases. The earnings season in the US. So the earnings season has been massive so far, with basically a lot of companies outperforming what has been expected of them, which has been one of the big reasons that markets have increased so much. So there's a lot of more companies reporting this week. So we're really looking forward to see what happens there. As we move on to the next part, central banks. What happens with central banks around the world is going to be a big determinant on what happens in markets, because inflation and interest rates are affecting so many things. Moving on to the next one, the Eurozone. So what happens in the Eurozone and the European central banks? We know that they have a big issue with the crisis around energy and energy sales. So how that inflation is impacting them. But good news is that just recently the UK dodged a recession. So their economic data came out and they just avoided a recession because their economy flatlined in that fourth quarter. So good news for them. They didn't quite enter a recession, but it will be interesting to see what does happen. So they're the main things to watch around the market, and a little bit of an economic update. Thanks a lot for listening. We hope you really enjoyed that. Just a short, sharp one from me, Stefan Angelini from Angel Advisors. Just a quick one. Anything you heard in this little recording is just general information only. Please don't consider it as personal advice. If you want some personal advice, please go and see your licensed financial advisor. Thanks a lot.